Hi, and good morning. Welcome again to another edition of Market Analysis for today, Monday, September the 18th, 2023. My name is Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. All right, so the Federal Reserve has a key meeting to prepare for this week, but it will also be keeping an eye on the United Auto Workers strike. The central bank is widely expected to hold rates steady Wednesday, but the Fed's so-called dot plot, which shows where officials see rates going, will likely be one of more interest to markets. Last time out in June, it showed two more rate hikes in 2023. We've already had one of those in July. One key question is whether the Fed will hike again before the end year, before the year's out. The market thinks it won't, and another is when it will start cutting rates. While the dot plot is useful to a certain extent, the Fed is in data dependent mode, so the future path of rates could change quickly along the way. Inflation data, in particular, will be weighing in on officials' minds. The consumer price index rose to an annual pace of 3.7% in August from July's 3.2%, but it's not just the headline data. Other factors are fueling inflation that the Fed will be monitoring as it looks to reach its 2% target. The price of energy is one consideration. Another is wage increases. Regardless of the outcome of the pay dispute between the United Auto Workers and the Detroit automakers, it will only add to inflationary pressures. A resolution would lead to a 40% or somewhere near that pay raise for workers, while a long-running strike could drive up car prices. It's only one sector, and for General Motors and Stellantis specifically, but it's indicative of a broader trend. Airline pilots, freight rail workers, and UPS employees have all secured hefty pay hikes in recent months. The last mile of the Fed's inflation battle has always going to be the hardest, but it's getting a bit tougher by the day. So with that being said, let's take a look at what we could perhaps see in today's market fluctuation. Okay, hold on for a second. Now, here we have in front of us NASDAQ. If we were to open right now, the market will be opening to obviously down, but let's see if the momentum that is picking up will hold the markets around this level and then give it a boost to the upside. If you take a look, we have the 20-day moving average above the market, so that will be like a resistance, a dynamic resistance for the market. So putting pressure obviously to downwards. If we do continue to fluctuate to the downside, we can speculate to come back and revisit the low of September 7th. So that's around 15,160. All right, but initially, if we happen to accommodate ourselves, the market happens to accommodate itself and then begin to trade higher. We first have the two moving averages as resistances. 1550 will be one of those levels of consideration, because before it was another level of resistance. Okay, so that could also be met before we continue. 15500 could be also a place. So that's where we see, if we do happen to push it to the upside, will be met real quick with some resistance around that area. Then we have the S&P, which in this case, the S&P, the 20-day moving average is below the market, and the 20 is right smack in the middle of it, of the fluctuation for today. So let's see if that will just make the index trade sideways for a while, around between 4,500 and the 4485 marker. So that could be a pivot point in reality. But let's see if at the bell we happen to spike up and see if we can come back and meet that high of September 1st. Then as for the Dow had that gap, particularly has been closed in a way, if you will. So the moving averages have already changed different direction. So that then they have crossed over the 20 from the bottom. So that indicates a push to the upside. right now, both indices indicators or moving averages are below the market, so that is going to give it some support. So let's see if we spike to the upside as when we open. Crude oil. All right, so crude oil, my target for the week is 95. Let's see if by Friday we have reached that marker or before. But it seems to be the crude oil will continue to have more momentum into it. $92 is going to be my resistance or my initial target for today. If we do happen to reach that level, we have to look at 95.65 around this, which initially, if you grab 92 and multiply that by 0.38% minus the 90.92, that will give you 91.65%. 91.65. So that will be, if we happen to come up to 92, if we expect for the market to retrace, to do a pullback from that level, okay, because we are in overbought territory, we can use that amount or that percentage to calculate a zone where the retracement, the pullback can come to. Okay, so 91.65, we basically, this is the high of the session, 91.65. So that's what I was going to say next, that perhaps 91.65 was going to be also the resistance inside of it for the market to pull back somewhat, because like I said, we are in overbought territory. But I'm going more with the initially $92. From 92, you can either come out of the position or just go the other way if you see it pulling back, and just calculate that 0.38%. Then we have Nat Gas. Nat Gas also, the moving averages are about to change their position. So the 10-day is looking to cross over the 20 from the bottom. So if that happens, obviously that'll be some sort of a indication that the market is going higher or point towards the high. So 270 would be my target initially. Okay, so keep that in mind. Then we have gold, that the moving averages are already below the market. The 10-day is about to cross over to the 20, so that'll give a nice little boost to the upside. 1940 will be that target. Now, otherwise, if we continue to pull back and retrace, 1920, which is where the averages are pointing towards, that will be our support. And from here, we could probably come in and take a position to the upside. Then we have silver. Silver also, but silver has the moving average above it, and the 10-day putting pressure on the markets as a resistance indicator. So 23-ish is that pivot point for it, but we are obviously above it. So let's see if the fluctuation will continue later on in a few minutes, or will it just, let's see, and come here and consolidate, which around this area has been that level before. So let's see if that happens. Then we have copper. Copper is just really the moving average horizontally. So that also tells me that this level around here is of interest. A lot of pressure, a big battle going over in copper. But let's see if the demand for copper pushes it back up to 380. Let's see if that will happen, or will it just tank. Then we have the currencies. Euro is retracing after having a little fluctuation to the upside. 106.50. 106.50 is the support for it. 106 is my support, but let's see if it'll continue to push lower. Pound is also in a doji mode. It balances itself out because dollar index is creeping higher. So as dollar index creeps higher, okay, then we could probably see those assets continue to push lower. But as dollar index retraces, let's see if 105 will be also that place, that target, and then just retraces and falls back down, lower to 104.50. That happens when we see a spike in our energy in the metals and currencies. That's it for me today. I'll see you tomorrow. Have a great trading day and week.